So once we've understood that it's the market cycle that dictates what we do at a decision level, when you look at a triangle like this, when you look at a sideways congestion pattern, which is what a triangle is, congestion and consolidation must happen in a sideways market. So how do we identify that sideways market? Well, let's take a look at a chart here, shall we? I'm just going to slide a chart into our view here, and we'll go to the 50-minute Aussie. And you can do this on your own, by the way, because this is a live, for those of you that are watching this video live with me, this is a live chart of the 15-minute Aussie, and you can go take a peek at it. The first thing you have to do is determine whether the market is range bound or whether it's trending. Now, currently the 15-minute Aussie US dollar, in terms of its market cycle, is transitional. Okay, it's still in somewhat of an uptrend, but that uptrend is certainly trying to shift a little bit. So when I take a look at this 15-minute continuation triangle, I realize that it may not be a great fit. It may not be the appropriate market cycle for that alert. And that's one fact that a lot of chart pattern traders have to understand, that you can have a chart pattern alert occur on your Autochartist, but it still has to go through that filter process. It still has to be occurring in the correct market cycle. Overlay the 34 period exponential moving average on the high, the low, the close. Create the wave. With the wave on a 50-minute chart, look at a look back of about 3 to 5 days. Within that look back, take a clock angle reading. For me, that clock angle reading seems to be about 2 to 4 o'clock. In other words, it's arguably a distribution market, but it's got still enough strength where it could be considered a weak uptrend. Okay, now if it was distribution, that more volatile sideways market, I could entertain the idea of using this 50-minute continuation triangle alert. If I feel it's a weak uptrend, that it's a no-go, because I cannot trade a triangle pattern within the context of an uptrend. But let me also mention something about the Autochartist platform, because the bottom line is you could have multiple patterns occurring not only on a particular pair like the Aussie US dollar, but it could be happening on the same pair. The same set of touch points that create a triangle, if the Autochartist recognizes some other touch points and draws another kind of line, I could get an alert of a triangle on a 50-minute Aussie, and at the same time I could also be looking at, say, a channel down or a channel up on the 50-minute Aussie. So don't think that there's just one chart pattern occurring on any particular pair, and really not on any particular time frame. The 15-minute chart, if you were to sit back and draw your own lines and levels, could have multiple downtrends, multiple uptrends, multiple horizontal support and resistance, and the Autochartist will recognize that. Realize that all those lines and levels could create multiple chart pattern results. And since that's the case, what you're actually going to be doing, and this is the easiest way to do it, is once you realize that the 15-minute chart of the Aussie US dollar or the 30-minute chart of the Aussie US dollar is in a particular time frame. Notice we're looking at the 30 now. I know the 30 right now is kicked up pretty well. In other words, it's 12 to 2 o'clock on the market cycle, and this continuation triangle is not going to work for what we need. Okay, good looking pattern, wrong market cycle. So that's probably the easiest and the most common way you'll find yourself filtering out alerts. Because again, remember, every one of these alerts are not trades. That's probably one of the initial mistakes people make when they are trading chart patterns, whether they're being recognized automatically or whether they're doing it manually. Just because you found a chart pattern doesn't mean it's valid. It has to be compared to, for validity, against the underlying market cycle. You're going to hear me say that over and over again, because I find that some traders, especially new traders, get so excited about drawing these lines and levels, finding the chart pattern, that they throw out the window the fact that just finding the pattern is not enough. It must be a good pairing with the underlying direction of the market. Okay, so let's go ahead and start scanning the market and start going about doing that process of Here's a chart pattern. What do we think of it? Is it a good good pairing? And again, remember, whether you're finding these things manually or whether you're finding these things with the assistance of Autochartist, the steps are exactly the same.